And joining us live now is the economist Shane Oliver. Shane, it's good to see you this morning. Thanks for your time as always. So the expectation was that things would be okay, is my understanding, if it were around 3.5% yesterday. But many are arguing that it's not okay because of that. So what's your take on it?
Well, the difference between the actual outcome and the expectation wasn't that great. The market consensus, the RBA's own expectation was 3.5%. And it came in at 3.6%. So a minor difference. The problem is that when you look beneath the surface, there was a broad-based higher level of inflation than expected, and underlying measures of inflation, which is what the Reserve Bank focuses on, and they strip out volatile items and items they don't have a lot of control over, it fell a lot less than expected. It fell from 4.2% to 4%. So that's what will concern the Reserve Bank. The concerns particularly around sticky services inflation. I must say that the numbers surprised me. We thought, say, earlier this year that the Reserve Bank would be able to start cutting interest rates around the middle of the year. This now pushes that out. Obviously there was already a risk that it would come later. The money markets had already been factoring in no cut until around February next year. And so that is certainly where the risk is. We pushed our expectation out to around December for the first cut, maybe November, December. Obviously quite a bit longer to wait if you've got a mortgage, but there is that risk that we may be waiting till early next year.
So you still think there might be one this year?
Yeah, we think our base case is that we still will get one. Bear in mind, inflation is still falling. It peaked at around 8% at the end of 2022, so we've come all the way down to 3.6%. We do have a pattern in occasional surprises on the upside. September quarter last year was on the upside, December quarter, and numbers for January and February surprised on the downside. Now we've got another bit of a bounce on the upside. Part of that was seasonal due to the way health and education prices work. So maybe we'll get a downside surprise come the June numbers. But we think that there's still enough momentum on the downside to push inflation down enough for the RBA to start cutting by year end. But obviously there is a lot of uncertainty around that. The reality is the economy has turned out stronger than we would have thought it would be. Households have bared up more solidly, and the labour market's been stronger. So these things have all thrown into the mix and created, I guess, less confidence on the part of the Reserve Bank that it might otherwise have had.
And why is those stickier items, and we're talking about rent here, we're talking about insurance premiums as well across the board. I mean, why is that still a problem?
Well, it's safe to think about the inflation problem initially. Go back 2 years ago, it was all due to a strong demand coming out of the pandemic and a shortage of goods. So China was still locked down, so we weren't getting the goods supply that we would normally have. Goods price inflation has come back pretty much under control. On an annual basis, still 3.6%. But many of the items you'd regard as goods, household equipment, appliances, clothing and so on, they've been seeing flat to falling prices. So that's good news. But the problem has been services inflation, as you point out, things like rents. Education is also a factor in there, insurance. There's specific factors in relation to some of them, the increase in catastrophes and storms and things, of course, increased claims, so insurers have to put up their premiums. The shortage of housing on the back of very high migration levels is contributing to the rise in rents. And of course, higher wages for teachers has contributed to the rise in education costs. So, but more broadly beyond that, I guess the concern is that the strong labour market is keeping upwards pressure or shortages of workers, upwards pressure on wages, pulling through costs to services companies, which they then pass on to their customers, all of which is causing this stickiness with services inflation. And obviously that's a concern for the Reserve Bank.
Okay, we shall see what they do next. But the headline being that we might not see a cut until next year. But according to AMP, maybe still one this year. We shall see when it comes to cuts anyway. Shane Oliver, thanks as always for your time.